Thursday the 30th of May, one more day to the end of the week and the end of the month, which will be an important day for closes. So the dollar index has completely fooled me. We had this big negative candle, a long upper wick, big red body, engulfing candle, followed by another big red bodied candle, indicating to me that this double top was in place and this would be negative for the dollar. Even this candle was quite negative. We tried to make a recovery and of course couldn't hold on to the gains. But then we gapped open, gapped higher, and we went higher again yesterday. So completely unexpected. What can I say? I've been caught out. The hourly chart says it all. We've recovered so much of the losses into the end of last week. It's only taken one day more to get there. Okay. So I don't really know what's going on with the dollar. The dollar gained from a risk-off situation, a flight to quality into the dollar. Although having said that, the yen didn't benefit much yesterday, which is a bit of a surprise. That normally powers ahead, and gold didn't do very well either. So now we just have to see what happens here. I wouldn't bet on the market holding this double top on a third test. A triple top is quite rare. Now the Aussie has held up quite well. So against the US dollar, we've got support down at around 69.10. We spiked a little bit just down to 69.00. So actually, this isn't too bad at all. So again, slightly confusing why the Aussie isn't suffering in this risk-off situation. If you call that a bull flag, which it could be, then a break above 69.35. Well, actually, look, you can see that we've got clear resistance up here at 69.40.45. I've had that on my reports for a long time. So that really will be the level to break. And if you're not long, then buying a break above 69.50 probably would be a nice idea, because we'll have cleared all this congestion and we will then be able to capitalize on that little double bottom that we've got here. If you want to bet on the negative trend holding, or even bet on us heading into a sideways trend, and Forex markets right now seem to absolutely love sideways trends, unfortunately, then this would be a great place to short with a stop above 69.50, because it's a pretty low risk trade. New Zealand dollar not holding up against the US dollar, so that collapsed further than I expected for sure. You know, I was getting all bullish about this after the break above the trend line, so I've got that wrong. The best I can guess now is maybe some sideways direction, and obviously it all depends on whether we hold 64.80, which is the previous low. Nothing else I can say about that. I'm leaving it alone. I got out of my longs. I actually got out at the entry because I just couldn't understand what was going on. So now I've got to wait and see what happens next. See if we get a double bottom. Dollar actually strong against the yen, which I wouldn't have bet on, bearing in mind the stock market situation. So this is a little bit confusing. I'm gonna again leave this alone. Forex markets are confusing me at the moment. So we clearly do have that strong resistance around 109.80, which worked before. We've got the 500-hour moving average heading down towards that level, and that certainly has been a good level to trade. Well, throughout May it was excellent resistance. So we'll see what happens there. I don't think I'll be selling it there. I think it's just too risky at the moment. I'm in a state of confusion today, I have to admit. Okay, so the euro couldn't hold above 111.85.95 and plunged. Looking at the daily chart, just congestion and sideways, and we're just going over old prices. So I'm going to leave this alone as well. Having thought this was a nice double bottom that matched that double top in the dollar index with these very bullish candles, it's proved to be completely wrong. We've just wiped out so much of those gains. And yeah, I'm going to have to leave this alone as well and try and wait for some sort of signal. A break below 111.00 should be negative. We are in a bear trend, and it will obviously kill the double bottom pattern. Right, Canadian dollar, you could call this a breakout. Sorry, the US dollar versus Canadian dollar, so it's bullish for the US dollar, negative for the Canadian dollar. There's not really much to add on that, is there? As long as we hold above the trend line, which I would suggest is around 134.90, 134.80, then this could be quite positive for the US dollar. If you are trying a long there, you really want to stop below 134. I'd say 134.60 I would give up on a long position. Cable's been okay for us. We had resistance up here, so if you were selling up around there, that worked okay. And now we're back to retest the lows. Do we get a double bottom, or do we break lower? This is the question. I don't know. If I had to bet on anything, I think I'd probably bet on a break lower, even though we're oversold. But as I say, I don't know what's going to happen with that one. We just have to wait and see. Gold is a tangled mess, lacking direction. My big support level is around the sort of 1278, 1277 area, which certainly held yesterday. So if you're buying into a long there, good luck with that one. You want to be out if we get into the low 1270 area. But I don't have any strong feelings about gold at the moment. It's been sideways for quite a while now. This is rather strange in oil. Spiked down. I wasn't following oil yesterday, so this is news to me. Spiked down and then strong recovery. So that in effect is quite a bullish candle, showing that buyers have really aggressively come in and taken the price right back up. So what do we do now? 59.40, 59.50 will be our resistance level for the day, and I would suggest that's the kind of crucial point. So holding below there, bears remain in control. We get above 59.70 and it's looking a bit more positive. 60, 60, 60, 80 is where we could get to if we move above 59.70. Right, now we get to the fun stuff. The head and shoulders pattern, which I've been talking about for weeks in the E-mini S&P, has finally formed. We were getting short anyway and hoping for a break below the neckline, which we've got. So I'm really hoping that although the Forex markets have been a bugger to trade, that you're making money on the indices, either holding short or if not, at least getting short on this break. So where did we get down to? 27.66. The only thing that really offers any support at all is a 200-day moving average, and I don't think that's really going to be as important as this neckline. So if you're not short and you want to get short, you're hoping for a bounce back to sort of 12.90, 12.95, 27.95, 2800, and you don't want the market really to be above 28.10. And if you are short already, you want to obviously get the market settling below 27.70, 7.75 so that we can start to push down towards, well, do you know what? I would say that I wouldn't be at all surprised to see 27.25.20 as the next stop. I'm pretty bearish on this. This is the only position I've got now. I've got out of those Forex markets that weren't working for me. So I've been selling up here and I've been adding to shorts, and I've added to shorts on a little bounce up. So let's see if I'm right. Very similar picture in the Nasdaq, which had looked even more negative than the S&P lately, so this is no great surprise to see us break below the neckline. 200-day moving average has held it at 71.65-ish. If we bounce back, we should have some resistance around 72.55, and then we've got that neckline at 72.95, so that's where we need to hold below. And obviously bears, shorts, we want this market below 71.60 now to start the next leg lower towards 70.95, 85 and further. Not even very oversold at the moment. This can stay oversold for quite a long time. E-mini Dow Jones also doing what I wanted, thankfully. At least the stock markets are doing what I want and breaking the neckline at 25.215. So we got down to 24.937. Obviously I want us to hold below 25 sort of 200. What's this little low down here? 25.320. Okay, wouldn't look too good above 25.320, that's for sure. So I'm hoping that we do hold below sort of 25.200 and markets continue lower. Just let me have a quick check of the weekly chart before I sign off. Okay, yeah, so the 100-week moving average is down here at 24.600, 24.570, so that would be a decent target according to the weekly chart anyway. Okay, so I remain bearish on the stock markets. They're developing as I hoped. Forex markets, I will admit I'm confused, so I'm not going to touch them. I got out of my positions, and we'll see how it goes. Sorry, I should just talk about the DAX, really, as I'm into the stock market so heavily at the moment. This, I don't really think I can argue that this is a head and shoulders pattern, not with this very, very high right shoulder. Okay, they don't have to be in line, but still. Anyway, if you think it is a head and shoulders pattern, then you're looking for a break below 11.800, which we kind of got. We got to 11.806. So watch for a break below 11.800. That should be pretty negative for the DAX. We've got this trend line resistance up here at just above 11.900 as well. So 1100 11,900, 11,800. These are the two areas that you need to watch today.